Start?
Yeah.
There we go. Hi everyone, we'll just give it another few minutes for people to join. And just while we wait, thanks to those who had already sent through questions. If you click on the Q&A button down the bottom of the Zoom, you'll bring up the Q&A box. You can put through questions as we go, and we can answer those as we go. I know some of the questions that have been sent through already we have built into the presentation as well. We'll just give it one more minute. Move this across a bit. Questions coming through already. Like it. All right, we'll just give it a little bit more. All right, I think we should get started. So, thanks everyone for joining. I'll just repeat what I was saying before. I think it looks like a lot of you have found the Q&A function already, but if you're joining us on Zoom, if you go to the bottom of the screen, you'll see there's a Q&A button that you can push. Feel free to put in questions as we go. We'll try and answer those as we go as well. Thanks to those that had sent through some questions prior to the session. We've tried to incorporate those into the presentation as well. Here we go. Okay. Let me just share my screen. And sorry, while I do this, thanks. Well, welcome back. I know there's a few people, or a number of people here who have joined our previous ones. Obviously, you're joining to look for updates around especially the free zone rules that were released recently, which we will cover. And here we go. And for those of you that have joined previously, you will find that we'll repeat a number of those steps, especially the sort of administrative steps that everyone needs to do. So bear with us. Okay. Okay, now the most common question that we are getting from clients is around the timing. So I think, well, everyone will be aware that tax went live on the 1st of June this year. What the tax actually, when tax actually comes in for people is your first financial year, which starts after the 1st of June. So that means for a company with a financial year January to December, your first financial year, which starts after the 1st of June, will be 1st of January 2024. So right now, even though we are technically in a tax environment, which started on the 1st of June, you're not actually taxable until 1st of January 2024. So what that means is your profit in 2023 is not actually looked at. It's only looked at for your financial year 2024, which you will then be paying tax in 2025. For companies that have not yet formed, or companies that formed after the 1st of June, you will be in your first financial year already, right? Your first financial year would have started when you were formed. So because you started after the 1st of June, you are actually taxable already. You are taxable from day one. Or companies that are not yet formed and will be formed, let's say you're starting up a company next month, you'll be taxable straight away. In contrast to that, companies that were formed prior to the 1st of June, in most cases, or in pretty much all cases, you won't be taxable at least until the 1st of January 2024. Now, we actually get that question a lot, which is, what is my financial year? So most free zones and the DED, the Department of Economic, so mainland companies, generally your first financial year runs from whenever you're formed through to the end of the current calendar year, and then you automatically align to a calendar year financial year. So what that means is, if your company formed back in 2021 in the mainland, or in say Creative City or Ras Al Khaimah, your first financial year would have run until December 2021, and then subsequent financial years would automatically be running from January to December. So January to December 2022, January to December 2023, and then you'll go January to December 2024, which is the first tax year that I was mentioning earlier. There are a few exceptions to that. So if you have changed your financial year, for example, you would have done that normally you would have done that via resolution. If you haven't done that, or you're not aware of doing that, then you probably automatically aligned to January, December. And there are some free zones which don't follow that pattern. So if you are registered in Dubai World Trade Center, for example, DWTC, your financial year, you'll be able to find that in your MOA, your Memorandum of Association, or your Articles of Association. What DWTC does is, the month that you register or that you form your company, that will be your first month of your financial year. Your financial year will run for 12 months from that, and then follows that pattern each year going forward. So let's take, for example, if you formed your company in April, your financial years will be running April to March every year, every 12 months. That's only relative to DWTC, really. If you're in another free zone, it's a very high likelihood that you're automatically aligned to January, December. So therefore, your first tax year will be January 2024. I'm just going to quickly scan the questions, because I know that start generally brings up a few questions. Abigail, your financial year is January, December. When is the deadline to register? So registrations are now open, including, they haven't announced it, but we can see that you can register for free zones now. So look, the deadline is quite long. I think you've got at least about 12 months, but there's no benefit in holding off unless you're going to be closing down the business before you become taxable. There's no benefit in holding off registration, so I'd recommend you just get it done straight away. Sorry, just give me 1 second. I'll quickly run through questions. Nope, nothing else around. Nothing else around timing, which is good. Okay, let's move on. So what are the steps that every business has to take? So previously there was a lot of confusion around this. I had a lot of clients coming to me with the impression that if they were registered in a free zone, for example, then they didn't have to register for corporate tax, or if they were under a certain size, they didn't have to register. Unfortunately, none of that is true. Every business needs to register for corporate tax. It doesn't matter how big you are, where you're registered, regardless, you will need to register for corporate tax. That, I think I've mentioned before, is now open for free zone companies. So there's no benefit in holding off registering. Your registration is similar. It's similar to a VAT registration, but completely separate. It doesn't matter if you're already registered for VAT. You still need to register for corporate tax. The second step that every business will need to do is keep proper accounting records. So the ministry have announced that accounting needs to be done to International Financial Reporting Standards, or IFRS. So that's the accounting standard that will be used in tax assessments. There is an exception where smaller businesses will be able to use a slightly different standard. But really, if you're not across how to do proper, keep proper accounting records, would probably recommend that you use an accountant to do that. And if you think about the rationale behind this, your accounting or your accounting records and your financial reports, that illustrates to the ministry what your tax position is. So it's very important that you get that correct. So let's say, for example, you're going to go for the small business relief, which we'll get to in a little bit, but you will need to prove to the ministry, or be able to prove to the ministry or to the Federal Tax Authority that you have kept accurate records, and therefore you can show that your revenue is under the threshold. Okay, the third step that every company will need to take is filing a tax return. And again, this is applicable regardless of your size or where you're registered. Even if your tax return is just declaring an exemption, for example, you'll still need to file it, right? So you need to notify the ministry of your position. And again, if we walk back through this, whatever you file will be determined by the accounting that you have completed during the year. Okay. I'm just going to, on each slide, because I want to answer the questions as they come through relative to these. So I've just got one here, say, is Shams free zone a qualifying free zone and must need to audit and tax return even? So yes, every company needs to do a tax return, even if the income is below 375,000 dirhams. You might not have to pay tax, but every company still needs to file a tax return. The tax registration certificate can also be used to declare tax residency. No, a tax residency certificate is something different to your corporate tax registration. Your corporate tax registration, you will get a corporate tax reference number, which can be used. I know that some offshore clients require a TIN, for example, tax identification number. You will get one of those from your corporate tax registration, but it doesn't replace what's called a tax residency certificate. Okay, I've got a question here from earlier on. So if you registered your company on May 15th, unless you've registered in DWTC, but let's say you registered on May 15th in RACARES, that means that your first your first financial year is running from May to December this year. And then your first taxable year is January to December 2024. So no corporate tax obligations for 2023, for May to December 2023. But we would recommend that you get underway with your accounting and obviously do your registration as well, because there's no benefit in holding that off. RAC ICC, Family Foundation, you still need to register, you still need to do a corporate tax return. You will actually need to elect to be a family foundation. Currently there's no, a family foundation will need to elect to be treated as a partnership or be treated as a taxable entity itself, that's a bit of a different question. That's David, your question there. Okay, so let's move on. Another question, does everyone need to register for corporate tax or only after a certain threshold? Everyone needs to register. Okay, I just want to, so there's three things we're going to walk through in this presentation, which are the three sort of categories of business when we're looking at SMEs. The first one I want to talk about is the small business relief. Now, what the small business relief rule looks at, it is a revenue-based threshold, so it looks at turnover. And what it says is if your revenue is less than 3 million dirhams, then you are exempt from paying corporate tax. Remember, this is a test on revenue, not profit. So revenue is your gross sales, your turnover, and this is a black and white test. So if your revenue is 2.999 million, you're exempt from paying corporate tax. But if it goes over that limit, you are fully taxable on all of your profit. The next one is the qualifying free zone person. Now, this is the one that has had a lot of attention recently. Indications up until a few weeks ago, or about a month ago, were that free zone companies were going to be exempt if all of their revenue was coming from offshore, or if all of their clients were offshore. What the ministry came out with was something very different and much more complex. And instead of providing exemptions to free zone companies with offshore activities, they are only providing exemptions to free zone companies which either only do business with other free zone companies or operate under certain qualifying activities, and we'll go through that in the next slide. But the main point there, and it's, you know, this has caused a bit of frustration or a bit of disappointment, is that a free zone company which is doing a non-qualifying activity which has all of its clients outside the UAE is not automatically exempt. And then the third piece, which is looking at taxable businesses. So if a business doesn't qualify for small business relief, if they don't qualify as a free zone person or qualifying free zone person exemption, and they are taxable, then the first 375,000 dirhams of profit is tax-free. And then they are taxed at 9% over that 375,000 dirhams. Now remember, that is profit, not revenue. More questions coming in. Okay, so we'll just go through again these new free zone rules. So what the ministry have said, they've come out with a what's called a de minimis rule. All that means is that you have a small threshold of non-qualifying income, 5%, but 95% of your revenue must be qualifying income. To make up that 95%, it must come from qualifying activities, which we'll go into in a second, or revenue from within free zones, either that's, you know, your own free zone or other free zones, and it's not excluded income. As you can probably gather, this is a lot more complex and gets a bit more difficult than, you know, what was previously expected, especially because the qualifying activities are it's quite a narrow list of categories, which we'll see in a second. Free zone companies, if they do satisfy that, so 95% of their revenue comes from qualifying activities or from within free zones, they still need to satisfy economic substance requirements. The qualifying free zone exemption does have a benefit in that it's going to go past 2026, which is not the case with small business, which we'll look at separately. And because there are additional administrative steps, such as an audit, you may get instances where a company may elect to not go for the free zone exemption and be a standard taxable person. This applies to smaller businesses which will be under the taxable threshold. Okay, so this is where we get to a bit, whoops, hang on. So I'll just go through again the different exemptions, and then we'll come back to free zones. So the other, let's say that you don't qualify for the for the free zone exemption, you will have available to you the small business relief. So not all is lost. If you are a business who was expecting to be exempt under the free zone exemption because your clients were all offshore, and you are a non-qualified, it turns out you are a non-qualifying business because you're non-qualifying activities, you will still have the small business relief available to you up until 2026. So if your revenue is less than 3 million, you'll still be exempt from paying tax. There's a slightly less burden on administrative burden on small business relief, so there's no indication yet that this will require an audit. A free zone company will require an audit if they're going to do the free zone exemption. But one key thing with small business relief is that tax losses can't be carried forward. So let's say you are in your first year, you have small revenue, but you have a large loss because you incurred a lot of expenses. It may be in your interest not to go for the small business relief, to try and carry those losses forward, because it may end up in a more tax efficient position for you through to 2026. And then finally we get to a taxable business. So a taxable business is a business that does not qualify for the free zone exemption, that has more than 3 million dirhams of revenue and has more than 375,000 dirhams of profit. Right? So only in that situation would a business be paying tax. So quite often, we're not even talking about deductible expenses or anything until, for many businesses, because many of them are not actually taxable once we look at their profit or their revenue. If you are a taxable business, you've got more than, let's say you're 5 million dirhams of revenue, you operate in the UAE with a non-qualifying activity. If that's the case, that's when you want to be looking at tax efficient structures. So do you have the correct level of salaries for expenses? Do you have the right mix of debt versus equity? And are you correctly categorizing all of your expenses so that you're not accidentally or inadvertently classifying expenses as entertainment, which is only deductible at 50% versus fully deductible expenses. Okay. Before we get into the detailed free zone stuff, I am going to quickly scan through the questions. A free zone company that opts for the 9% tax schedule will get the benefits of the 375,000 non-taxable bracket. Correct. So if a free zone company opts out of the free zone exemption, so it opts to be a taxable business, it will have available to it the small business relief, and it will have it available to, it will have that taxable threshold available to it as well. Does an entity opting for small business relief still need to register and file a corporate tax return? Yes, absolutely. So if you are going for the small business relief, let's say you have a business which has 1 million dirhams of revenue, you need to register and show to the Federal Tax Authority that your revenue is less than that threshold and that you qualify for the small business relief. So the way you do that is you register, you do proper accounting, and then you file a tax return which shows that your revenue is under the threshold. Companies with over 3 million in revenue, would they have the first 3 million tax-free? No. So that revenue, that small business relief test is a black and white test. So if your revenue, keep in mind we're talking revenue here, not profit. If your revenue is 2.999 million, then you're exempt. If you go over that 3 million, if you hit that 3 million threshold, that means all of your profits over 375,000 are taxable. The licenses with the DED need to register, yes. Okay, there's a good question here, which is around deductible expenses, and maybe we'll talk briefly about Deductible expenses. So the question that we get most often around this is around salaries paid to owners. So just keep in mind that we're only talking about deductible expenses if your revenue is more than 3 million, right? So if your revenue is less than 3 million, then the tax authority isn't even going to look at your profit. If your revenue is more than 4 million, that's when you need to start looking at your expense base. The main principle for expenses to be deductible is that the expenses were incurred in generating the revenue of the business, right? The second most important principle around the questions that we get is around, can I just pay myself a huge salary, right? So let's say you have a company that has 4 million dirhams of revenue, and people ask me, well, can I just pay myself a 4 million dirham salary, and that means I've got no profit? The answer, the short answer is no. The longer answer is any salaries or any type of payment to what's called a connected person needs to be market value or at arm's length. So what that means is if that person was working for an unconnected company, so a third-party company, in normal employment, would they be earning the same or a similar amount? And that's the test, right? So you can't just go and pay yourself you can't go and employ your wife, your son, and your daughter, and pay them all 1 million dirhams each. Obviously, that's tax evasion. It has to be market value. It has to be what they would be earning in the same capacity for an unrelated party. And that also applies. That principle applies for transfer pricing, for example. If you have transactions with connected companies, the definition of connected persons is quite extreme. I think it goes to great grand nephew, I believe. So even a transaction with a relatively distant cousin a somewhat distant relative could potentially be looked at for market value. Now, of course, I don't know how often that's going to happen, but they're certainly looking for that. A free zone company with revenue under 3 million. So a free zone company, if you don't qualify for the free zone exemption, then yes, you'll have the small business relief available to you. Because what happens is if you don't qualify for the free zone exemption, you become a taxable person, and taxable person has the small business relief available. Okay, some good questions here. So if your revenue is less than 3 million, but your profit's more than 375,000, you don't have to pay tax. So think of it as two layers. So the first layer you get to is they look at the revenue, right? And if your revenue is less than 3 million, they stop there. If your revenue is over 3 million, only then will the FTA go and look at your profit. So it does, it is strange because you may get a company which has 4 million revenue, but profits of, let's say, 1 million, and they are paying tax, versus you may get a company which has 2.5 million of revenue and 2 million of profit, so more profit, but they're not actually paying any tax at all. So look, the small business relief rule is something that's put in place to kind of soften the blow a bit for smaller companies. It is only in place until 2026. We don't know what will happen beyond that. They may extend it, they may change the rules, they may change the threshold, but really we don't know. Okay. Let's, RAC ICC need to register for corporate tax. Okay. Okay, and so there's a question here, when will the government start asking companies to deduct 9% at source on an invoice? So it's not, so the corporate tax is a direct tax, but it's done at the year end on your profits. It's not something that is done on an invoice level, which is like VAT, where you add, the 5%. What happens is at the end of the year, you submit your profits to the Federal Tax Authority, and then you pay 9% of those profits, notwithstanding the exemptions we've talked about. this question might be referring to withholding tax. So currently there is no withholding tax in the UAE. The tax authority has sort of set the blueprint for withholding tax. What withholding tax is when you make a payment overseas, to an offshore entity or an offshore supplier. Withholding tax means that you have to deduct a proportion of that and pay it to the government. Now, normally what that means is that supplier overseas receives less money from you because a portion of that goes to the government. A lot of the other Gulf countries do have it. Saudi, Oman, Qatar has it for non-free zone companies. So it will probably come in at some point here. The tax legislation does say that it's technically in place in the UAE, but it's a 0% rate and nothing's needed to be done for it yet. So it will come in at some point, but not for now. Okay, let's jump into free zones. All right, qualifying activities. Now, I mentioned before that it's quite a narrow list of categories. A lot of the clients that we have are management consultancies, marketing consultancies, a lot of import-export. Most of these clients will not fall into the qualifying activities for the free zone exemption. So these activities, I know it's a very busy list here that I've got here, but I didn't want to try and summarize it. But as you can tell, a lot of the number of activities or the volume of activities that aren't listed here really speaks to the narrowness of the activities that are listed. So I think the vast majority of companies that are registered in free zones will not qualify for the free zone exemption, especially a lot of our clients. One thing just to be aware of, if you are for example, a manufacturer, or if you provide aircraft financing, you have 95% of your revenue has to come from that activity, right? The 5% threshold that you have for your non-qualifying activity, that can be what's called excluded activities. The main excluded activity that people need to be aware of is transactions with natural persons. Now, again, unless you are only doing trade within a free zone or you are doing a qualifying activity, this isn't going to matter to you because you're not going to, you won't qualify for the free zone exemption. But for those of you that are doing a qualifying activity or you are only trading within free zones, what you need to be mindful of is the excluded activity. So the biggest one here, especially for SMEs, is any transactions with natural persons. So what that means is if you are selling a good to a natural person, so as opposed to a company, you're selling it to an individual, that is listed as an excluded activity. So that doesn't count towards your 95%, it counts towards your 5% of non-qualifying activity. So what we get is, if you think of it logically, if you are a free zone company that is, you're a cafe based in a free zone, you can't claim that you're only selling to other free zone companies if you are selling coffees to individuals, right? So this is why they can't actually allow sales to individuals or transactions with individuals to count towards the qualifying activity. It's a very basic example, but I find that it does illustrate part of the rationale behind having this in here. So look, these qualifying activities, you can get the list if you go to Tax GPT, for example, ask what the qualifying activities are. It'll give you this list. Like I say, it's tough because there was a lot of expectation that free zone companies were going to be exempt regardless of their of the type of activity, as long as it was offshore, but that's not going to be the case. Okay, do you have to register? Yes, sorry, I'm just jumping through some more questions. Okay. okay, this is a good question. So the de minimis criteria, should it be satisfied only at the end of the financial year or every day throughout the year? So you don't have to monitor this day in, day out, right? So at the end of the year, you will file a tax return, and only then, because you'll only do one set of financials, and to get the free zone exemption, you have to submit audited accounts. And it's those audited accounts which will need to show that 95% of your revenue was qualifying revenue. So it doesn't matter if you earned, 95% of revenue in the last couple of days of the year. It's what's in the financial, in your financial statements for the full year that counts. So you don't need to monitor that on a day-to-day basis. I mean, obviously worthwhile monitoring on a day-to-day basis, because you don't want to be in a position by the end of the year that you find that you've breached it. But it's not like if the Federal Tax Authority will look at your operations go through your operations historically day by day and make sure that you maintain that level, because that's quite impossible. Okay, so look, I've tried to summarize the free zone rules in a diagram. So basically, to get the free zone exemption, 95% of your revenue has to come from the green boxes, and 5% or less can come from the orange boxes. So if you look at across the top, we've got type of activity generating the revenue. You've got qualifying activities, non-qualifying but not excluded activities, and then you've got excluded activities. Qualifying activities you can do anywhere, right? And it counts towards your 95%. Non-qualifying activities, so let's say a marketing consultancy, you can perform within free zones, right? So if let's say you're a marketing consultancy in a free zone and you have one client in another free zone, and that client makes up 100% of your revenue, then you will be a qualifying free zone person. Let's say you're a marketing consultancy, you have one major client in another free zone, and then one very small client, less than 5%, who is on the mainland or is offshore, then you'll still qualify for the free zone exemption, because 95% of your revenue is coming from another free zone or the same free zone. Okay, let's just jump through a few. So there's some specific questions around industries here. If we can't see activity on either list, which is recruitment, do we assume it's excluded activity? Yeah, so it's a non-qualifying activity. So recruitment won't be a free zone qualifying activity. Okay, just got a question here. Is there special treatment for DIFC registered companies here that it's postponed? No. Everything that the Ministry have said so far is that all free zones are treated the same. What you've probably heard about DIFC is that most companies have a January to December tax year, and so financial year, and so they say it's postponed. It's not. It's going to be starting on the 1st of January, which is the same as everyone else. Okay. So I just want to go through, I just want to finish with some examples, because, especially for those of you who have joined prior webinars, there was a lot of talk around deriving income from offshore. I just want to go through, now that we know the free zone rules, what some examples look like. So if we start top left, this is what previously we thought was going to be exempted. So let's say, it's a free zone company, it's doing a non-qualifying activity, for example, a marketing consultancy or a recruitment firm. 100% of your revenue is coming from offshore clients. You're not going to be exempt under the free zone rules. If your revenue is less than 3 million, you'll still be exempt from paying tax, at least until 2026. But it's not a case of having 100% of your revenue from offshore, meaning that you're exempt. So that's not going to qualify for an exemption. In contrast, if we go to the middle column, a free zone company conducting a qualifying activity, for example, aircraft finance, 100% of the revenue is from offshore. They meet the other qualifying activity, the other qualifying free zone requirements, such as the ESR test, they will qualify for that exemption. And on the third column, I've just put it here to illustrate how the rules work. So that same qualifying activity, let's say they're doing aircraft finance, it doesn't matter if the revenue is coming from offshore, onshore, wherever. It's based on the activity. They will be a qualifying free zone person. Second row, so we look at a free zone company, non-qualifying activity, so a marketing consultancy or a recruitment firm. 90% of their revenue comes from sales to free zone companies, but 10% comes from revenue from mainland clients. Because they have, even though 90% of their revenue is coming from free zone, but because it's only 90%, not 95%, they've gone over that 5% threshold, so they wouldn't qualify under the free zone rules. Again, that company would still be exempt from paying corporate tax if their revenue is less than 3 million. But if their revenue is more than 3 million and they had a greater than 5% proportion of their revenue coming from outside the free zones, they would be a taxable business. Contrast to that second row in the middle column, a free zone company, so same company, but now 95% of their revenue comes from free zone companies. 5% comes from only 5% comes from revenue from sales to the mainland. They meet the other requirements. They would then qualify as a free zone person. Now, depending on the size of the company, and I mentioned this before. Actually, let's jump to the next slide. Oh, sorry. Actually, no. I'll quickly scan through some more questions before we move on. If we're a marketing consultancy business, free zone company with 100% offshore customers, you can still fall under the small business regime. Yes, you can. So I use that example to illustrate the difference from the previous sort of indication, which is that if you were 100% offshore, you were likely going to be exempt. Not the case. You can still take advantage of that 3 million dirham small business relief. ESR, that's economic substance regulations. It's something that has been in place since I think 2017. So it's a mandatory requirement to look at that every year. Yes, thin capitalization restrictions. Yeah. So if we just talk about deductible expenses for 1 second, you can only deduct a maximum of, I think it's 5 million dirhams of interest, or 30% of your EBITDA, so your earnings before interest, tax, depreciation, and amortization. So the point of this is, if you have a lot of capital in your business, in theory, you can pay that out as a dividend, reinvest it as a loan, and then the company pays interest to the owners as a deductible expense, right? It's a very common arrangement, especially in other jurisdictions around the world where tax regimes have been in place for a long time. And what the ministry or what the Federal Tax Authority has said is, yes, this is allowed, but only up to a certain amount. Basically, that means that you can't just give your business a huge loan and then deduct, and then take a whole lot of expenses out as interest. Okay. Our offshore company in JAFSA only has qualifying activities. If you're only doing qualifying activities as per the list that I showed before, you still need to go through the administrative steps. So you need to register, you need to do your accounting, you also need to do an audit, and you'll need to file a tax return. And you also need to meet the economic substance regulations. If you meet all of those criteria, then you won't be paying any tax. Okay, so let's jump ahead. Look, this is a quick, I say a quick summary. I know it looks complex because the question is, after all of this, who actually is going to be paying tax, right? So let's run through this quickly because you know, as you can see, there's a lot of lines here, and that really illustrates how complex these free zone rules are. But quick test: are you a mainland or a free zone company? If you're a mainland company, is your revenue over 3 million? If it's over 3 million, is your taxable profit more than 375,000? Then yes, you'll be paying tax. If you're a free zone company, if you have more than 5%, unless you have 95% of your income or your revenue, from qualifying activities, then you're going back to the same test, that 3 million or 375,000 dirhams. Okay, I don't want to spend too long on this. I just want to jump quickly through to finish with the return to the administrative steps, because this is by far the most relevant piece, right? So from everything we've covered before, up until now, I just want to reiterate that every single company needs to register. They all need to do their accounting up until, to the standard of International Financial Reporting Standards, and they all need to file a tax return. I just stopped sharing. So that applies, again, regardless of whether you qualify for small business relief, of whether you qualify. Obviously, if you qualify for the free zone exemption, you have to do that and a bit more. You have to do an audit as well. Or even if you're not, if your profit is less than 375,000, it doesn't matter. You still need to register. You still need to do your accounting. You still need to file a tax return. There's a few questions in there around, is there anyone to do this for us? Yes, absolutely. Here at VirtuZone, we provide all of these services. We've got great packages available. It includes consultations, one-on-one consultations to go through all of this specific for your business. We ensure that you're registered in time, that you've got all your accounting up to the standards, and of course, that you file. If we make sure that you take advantage of any exemptions that are available to you. Okay. So thank you, everyone. We raced through that. Sorry I went over by a couple of minutes. Feel free to submit questions either on the VirtuZone website. You can go to taxready.ae and download a guide, or of course we've got our tax bot, our tax assistant box, a tax assistant bot called taxgpt.ae. So please go ahead, check that out. Send through any questions that you want, and we can, and obviously, we're happy to set up a call and help you out. So thank you very much. Thank you for joining, and we'll hopefully talk soon.